Canacord Analyst and Managing Director George Gianarikas recently said in an interview with Yahoo Finance that Tesla might have overcorrected on the downside. He emphasizes the three catalysts that could re-energize Tesla stock: the upcoming next generation Model 2, margins, recoveries, and increasing adoption for full self-driving FSD, as well as the rapid growth in Tesla's energy storage system. All this and much more in today's video. So welcome to my channel where I give you the latest Tesla news. You are never as proud for the things you accomplish as you are for the things you endure to get there. Alex Hormozi. So, here's a little input with George Gianarikas in an interview with Yahoo Finance.
Now this week we are focusing on these three laggers and what it's going to take for the companies to turn things around. Today, the focus is Tesla, currently trading just around $179 a share, a loss of nearly 30% this year alone. Our next guest, though, saying that now could be a good buying opportunity. For more on that and what the catalyst will be, we want to bring in George Gianarikas. He's with Canacord Analyst Managing Director there. George, it's great to see you. So talk to us about why you think Tesla is a buy at these levels.
Well, first, let's address the reason why it's lagged. And it's pretty simple. The numbers have come down. I mean, if you look at the earnings revisions for the last 12 plus months, they've been terrible. I mean, I think we started for 2023 somewhere early in that year on $6, and it came all the way down to $3. And I think we're at a period of time right now where the worries likely exceed the reality. And we had some numbers last week come out of China that weren't very good, but those people didn't take into account that the new year has been pushed into February. Also, some stuff that happened in Germany. Their plant came down for about a week because of arson, a week plus. And in the U.S., people are worried about the production of their new Model 3. And we think that the best way to kind of gauge, for the most part, what's happening with Tesla, particularly in the U.S., is to look at their prices. And they've been pretty stable in the U.S. over the last few months. So, there's a lot of wood to chop still in the quarter, but in the near term, we think that we may have overcorrected here to the downside.
They talked on their most recent earnings call, George, about the spending and some of the record R&D that they had done during 2023, which now places a lot of emphasis on bringing that to fruition in 2024 and years following now. How much of that spending do you anticipate will lean further towards the side of this artificial intelligence narrative that has started to prevail with Tesla, even though we've seen some early slippage this year, at least in the price action?
Look, we're in a little bit of a pause period right now for the stock. In the near term wiggles, we think we've overcorrected, but for the stock to really get its legs, we have to have three things happen. First, the next generation vehicle has to start to ramp, or people have to gain confidence that it's going to ramp and be successful. Second, their margins need to go up. And the most likely lever for that happening is the increase of FSD, full self-driving penetration, which leverages the AI that they've built, in addition to volumes starting to pick back up. And third, it's continuation in growth, really good growth in their energy storage business. So when you talk about leveraging this R&D that they've spent a lot on, it's two real products that come out of that, the big spending. It's number one, that next generation vehicle, which we think should start production in the second half of 2025, and continued FSD penetration. Now,
well, I have to say, and please don't hate me for this, I have used the low stock price to add to my position whenever I can. I have actually sold some of my other positions to get more Tesla shares. Not investment advice as usual, of course. I was hoping for Tesla to stay down just a little bit longer so I can add more shares. We have to understand that the media is looking for views. They really don't care about anything else. They're looking for views and advertisers. The more views they get, the more advertisers come strolling in. So when they keep talking bad about Tesla, it's just because they're getting a ton more views and more advertisers. That's how they make money, so it's understandable. We know by now that Tesla is updating their inventory daily and according to supply and demand, adjusting the price of their models, nothing else. Anyway, Tesla is my number one stock in my portfolio. And I envision Tesla to be the second or third biggest and most valuable company by 2030. Tesla is amazing with its innovation and creativity. So, while not too long ago, no one was talking about robots in the United States until Tesla came out with the Optimus Tesla bot. And yes, China had robots before, and Boston Dynamics and other companies had some, but those are not robots to help with labor shortages. Until now, of course, because we have the Figure 1 robot being developed right now.
Hey, Figure 1, what do you see right now?
I see a red apple on a plate in the center of the table, a drying rack with cups and a plate, and you standing nearby with your hand on the table.
Great, can I have something to eat?
Sure thing.
Great. Can you explain why you did what you just did while you pick up this trash?
On it. So I gave you the apple because it's the only edible item I could provide you with from the table.
Great. So, based on the scene right now, where do you think the dishes in front of you go next?
The dishes on the table, like that plate and cup, are likely to go into the drying rack next.
Great. Can you put them there?
Of course.
Tesla's approach to self-driving is different than other companies. Tesla's vehicle computers learn from experiences. And while the media spins around Elon Musk's wealth and who the next wealthiest person is, and that Elon Musk has lost his position as the wealthiest person, I don't think Elon really cares. He's on a mission to finish what he started and to add what is necessary to make the future better.
It's two real products that come out of that, the big spending. It's number one, that next generation vehicle, which we think should start production in the second half of 2025, and continued FSD penetration. Now, we think that the FSD offering from the company at $12,000 currently is a little too rich, particularly relative to the cost of the vehicle. We think the company should cut the price of that FSD to really increase penetration and really have the margins start to turn in. If you think about it, that offering is about 100% gross margin, very, very high gross margin because it's a software upgrade. Well, look, there's been a pause, like I said, recently, particularly in the US. The price declines that we saw for the most part in 2023 is sort of ebbed right now, which for us is an indication that maybe things aren't that bad. And what the company did strategically by being that aggressive is, first of all, they get to sell more vehicles, right? Because interest rates went up and most people financed the purchase of their vehicles. So that meant that the prices of vehicles went up artificially. But second, it put a lot of their competitors on their back legs. I mean, margins got a lot worse for some of the pure play EV competitors. Sales got a lot worse for them. And even for the traditional OEMs that try to compete against Tesla, their margins got significantly worse because they couldn't compete with Tesla on price. So what we saw is, longer term, what Tesla did is put a lot of its competition on the back foot, particularly in the United States and Europe.
So according to Teslarati, a recent report from Germany claimed that Tesla CEO Elon Musk had been paying a visit to Giga Berlin Brandenburg on Wednesday. Musk also met with officials during this visit. Giga Berlin just recently got its power back. Employees held a demonstration in support of Tesla during last weekend. Giga Berlin Brandenburg was forced to shut down its Model Y production last week after an alleged arson attack that was claimed by the Vulcan Group, which is strongly anti-Tesla. German utility West Energy CEO Kathaleen McCormick has called for a collaboration between policymakers and power grid operators to strengthen the response to attacks on the country's power infrastructure. The executive's comments come on the heels of the suspected arson attack against Tesla, March 12. This petition urges the NHTSA to stop calling OTA updates recalls. one Tesla shareholder has launched a new petition encouraging the National Highway Traffic Safety Administration, or NHTSA, to change the language surrounding safety recalls that are fixed with an over-the-air or OTA software update. On Tuesday, Sawyer Merritt announced on X that he has launched a petition to urge the NHTSA to stop classifying OTA software updates as recalls, and to end the use of paper recall notices, which are often sent months after the issue is fixed with an over-the-air update. March 13th, Tesla executive sees potential growth in Southeast Asia. Tesla executive Rohan Patel pointed out Southeast Asia's potential as a place for growth in battery storage and electric vehicle adoption. Patel is Tesla's vice president of public and business development. He recently congratulated a new Model Y owner in Malaysia. Tesla Malaysia recently started delivering the Model Y units to reservation holders. According to Patel, Southeast Asia will undoubtedly be a major place of growth over the coming years in battery storage and electric car adoption. And if you like this kind of content, please like, subscribe, and turn on notifications so you won't miss any updates. The Delaware Chancery Court Chief Justice Kathaleen McCormick has reportedly admitted that she has received many communications from Tesla investors about her decision to rescind Elon Musk's 2018 pay package and the request of the lawyers who won the case to be paid over $5 billion worth in Tesla stock. The judge, however, has noted that she is not reading any of the shareholders' letters. In late January, Judge McCormick ruled in favor of a thrash metal drummer and car enthusiast, Richard Tornetta, who held 9 shares of Tesla and who sued Musk over his 2018 pay package. It was one shareholder with 9 shares over the majority of shareholders with many more shares than 9. So Tornetta's lawyers feel as they should be compensated with 29 million Tesla shares worth over $5 billion. I am sorry, but however you turn this issue, it's not right, and it's simply upsetting. Tesla stock has been subject to negative sentiment that are overdone, according to Wedbush analyst and Ives. Ives believes Tesla can achieve a base delivery goal of 2.1 million units this year, with a stretch estimation of 2.2 million cars being delivered. The final 3 quarters of the year will have to prove to be an entirely different story than Q1, because the company is tracking softly towards the 430K levels, I've said. The consensus surrounding Tesla stock in the early portion of the year stands as questionable in terms of demand, production, and the advancement of its product line. While demand seems to be slowing slightly, some indicators that Tesla is due to have a slower year in 2024. The company stated that its growth rate could be slow due to the focus of the next generation platform, which is set to hit the market in the later half of 2025. And as EV deliveries might slow down, the energy business is going strong.
I think right now overly negatively discounted in terms of the Tesla story. Look, near term, clearly units are going to be soft for 1Q. Just getting back from the region, I believe price cuts are now starting to subside in China. That's important. I think when you look through the next 6-9 months, we're going to look at this as more of a golden buying opportunity for Tesla over the next 2-3 years, especially with AI, rather than time to throw in the white towel. But for now, we all know, I mean, the New York City cab driver is bearish on Tesla here.
What does that mean? Sorry.
Everyone's bearish. The piling on's there. The bears are coming out of hibernation mode. I get it.
See what you mean, yeah.
But we believe now is not time throwing the towel on Tesla and Apple. I think we see there 6-9 months now. Stock's much higher.
Thank you so much for being here. And if you would like to know what's going on with Tesla during March so far, you could watch this next. My name is Claudia, and I will see you in the next video. Goodbye.